Welcome back, guys. Today we're back at Shawbrook's new head offices in 40 Leadenhall Street. These offices are amazing. Today I'm actually with Jazz Bogle, who's a strategic relationship manager at Shawbrook. Jazz, welcome.
Thank you.
Thanks for having us.
Absolute pleasure.
I think just give the viewers a little introduction on who you are, how long you've been at Shawbrook, your experiences, and then we'll dive straight in with the questions.
Absolutely. So Jazz Bogle, Shawbrook Bank, look after London, look on our strategic partners in the London area. I've been with the bank for the best part of, well, since inception certainly and beyond, so I've been here a long time. It's been a hell of a journey, and it's been a pleasure to kind of see the bank evolve and kind of grow as it has. It's grown arms and legs at a serious magnitude, but yes, it's been a pleasure to be part of it and see it from the start, really. Yeah.
So I think we've actually known Jazz for probably just over a decade when we started working with you guys. Now let's dive in. 2024 was actually quite an interesting year.
Absolutely.
What are the changes that you saw? Is there any changes in the way that borrowers are now facing the property market in terms of their strategies, their mindsets?
I mean, 2024 was almost just another year, right? Let's be honest, the last 5 years, it's been absolute turmoil, hasn't it? If it's not been COVID, it's not been, legislation changes, taxation changes, wars going on. There's been a lot going on and there's a lot happening. And 2024 almost was no different. But I think from our perspective as a bank, we're very, very fortunate, the kind of brand that we have and the reputation that we have in the industry, and even the business model, and the way we raise our funds and being able to kind of really stay solid and be in the market when others maybe are not so, fortunate, it's put us in really good stead. So we've been able to kind of really stay on that journey with investors, support them for what they're going through and their challenges. It's been interesting because, like you say, if you look at 2024, initially it was kind of swap rates all over the place and constant change of interest rate, which means that investors just don't know what deal applies to them anymore. We've been quite fortunate, right? The business model as it is and the way we raise our funds means that we've been able to kind of honour what we say we're going to do. And with the appetite to lend that we have and kind of being able to support the investors, it's been a journey. But I think if you look at 2024 as a whole, kind of the way investors started the year with regards to the standard typical business model of just typical buy-to-let stuff. By the end of 2024, you can clearly see that there's kind of a difference in strategy and where people want to go.
Do you think there's been a shift in terms of London and the rest of the UK? How's the London market been holding up, and have you seen people now shifting to start investing in other parts of the country they may not considered initially?
Absolutely. I think if you take into consideration that the rise in interest rates, and then you look at London with regards to kind of yields, I think it's fair to say that people are probably not making the same kind of profit or appreciation that they would have done with the rental. So what people are now doing is probably, and it also helps with new investors as well, right? New people who are looking to get into the market and grow their portfolios. You do see a lot of people kind of looking up north now, and the northern areas of England, certainly with the opportunity that you have to kind of buy property or security at a cheaper value, but then also kind of generate better yields, and it's also the opportunity, like the single buy-to-let market probably isn't where it was. You buy those properties up north a little bit cheaper, which is great because it means you can maybe buy more or invest more. Gives you the opportunity to convert those to different types of property to get more rental yield, and the yield will be better. But ultimately, from a capital appreciation perspective, I still think in the long run, if you look over the journey of the term, then probably London will still be where you find the most capital appreciation.
Oh, definitely. Now with buy-to-let, there's been a lot of speculation about this. Do you think it's dead, or do you think it still has some legs?
It's such a difficult one. It definitely has legs. It definitely has legs. I think it's how investors approach it, which is the difference. So we've seen, I guess I can touch on two things here to kind of elaborate on that. The typical buy-to-let market of a single buy-to-let, I think that market is really slowing down because, as I said before, where yields haven't particularly gone up and interest rates have, the profit margins and the returns that investors make on those kind of securities isn't really there. But if you look at kind of how you can develop buy-to-let, the opportunities that you have now to create HMOs with multiple, kind of rent coming in, that makes a big difference to kind of your investment. So the HMO market, the specialist market, multi-unit freehold blocks, that sort of stuff, blocks of flats, That's the sort of stuff where you see those really keen, experienced investors getting into. And on the flip side, also kind of, commercial. I think that's another area where people are kind of looking, and particularly from my experience in London, you kind of look at the commercial market, and experienced investors are now kind of going, well, actually, where can we get a better yield, right? We're not going to continue to buy residential property. Where can we get the next best yield? So they're looking at commercial security because the yields are better, and that's where you kind of got to be a bit flexible from a lender's perspective as well.
Do you see commercial to commercial as a strategy? So it's permitted development now to carve basically commercial premises into multiple commercial premises. Have you seen that sort of rise now with the applications that have been coming through?
Not as much as it's definitely a strategy. I think that's probably something that will come into play. I think more this year, because, and I guess when you look at the stamp duty situation as well, with the fact that it doesn't necessarily impact commercial as much, I definitely think investors will be probably looking at that area and going, actually, again, if you've got one commercial unit but there's space to convert it into more, from a rental perspective, why would you not do that, right? So I think that will be definitely something that people will pursue this year. I kind of saw it come in late last year, but it's definitely something that's growing arms and legs.
Yeah, it's something that we're actually looking into more and more, because what we found is there's a lot more startups that actually need a cheap commercial place, and obviously with commercial units you have like zoning. You can then repurpose the areas that probably won't generate much per square foot into smaller units, and they may be ideal for like nail bars, hairdressers, podcast studios, rooms like this.
And the benefit for the investor as well, right?
Yeah, it's a benefit for the investor, and then obviously
multiple rental source.
Yeah, and then it increases the value of the property. So it's something that we're definitely looking at, where spaces we may have traditionally neglected, like for example, basements don't tend to have windows, but you could probably use that as like a podcast mini studio, and someone will pay a decent amount of money for it. So it's something that we're actually considering. Now with interest rates, obviously the Chancellor, Rachel Reeves, has announced some changes with that. So there's some changes that came in immediately with the stamp duty levy tax, and 1st of April there's going to be some changes to stamp duty. How do you see that impacting the property market? Do you see sellers having to accept lower prices and buyers basically negotiating prices down to include this, or do you think they'll just basically incorporate this into their offers?
We've already been seeing that. I think, look, realistically speaking, if I looked at last year's trends from a lending perspective, it was a very heavy percentage more towards refinance. Purchase market wasn't really as affluent. But having said that, when you've got strong investors who have a great portfolio that's geared pretty low, they're still hungry and they're still looking to grow their portfolios, right? They want to take what they can get, which absolutely they should be. And I think the difference now is vendors, when they're looking to sell their properties, they have these properties at asking prices. Knowing that stamp duty has gone up, I think they're also in a position where they acknowledge the fact that they're probably going to have to, there's going to be a bit of flex on that, right? Because if you want to sell your property, but the stamp duty's gone up, for sure the person who's looking to buy that is going to negotiate on the purchase price, because they want to alleviate the stamp duty situation. So 100%, as and when the purchase market, I think, increases, there will definitely be negotiation around purchase price. Absolutely, no doubt about it.
We've seen the same as well. So we've had some transactions that were going through, they were at offer, the offers were accepted, and then when we looked at what the impact was going to be, there were some cases of £8,000, sometimes more. And our clients, we actually advised them to put those lower offers in, and vendors were aware of obviously the changes and had to basically work with our clients. So we're actually seeing that as well, because obviously the end GDV is not really going to change much. Now, when it comes down to strategies, have you seen like a shift away from, let's say, the traditional new build strategies of buying land, building up, and more emphasis towards conversions, which can typically take less than 6 months? So we're referring here to commercial, residential, and HMOs.
For me, debt finance is still something that happens. and it's a bit of a slow burner. You know, it's definitely there, but it's more for those kind of guys who go, they see an opportunity and they go, okay, right, but you know, you wouldn't get your hands involved in probably too many at a time. The thing that just continues to just, you know, churn through the bank, and it's something that we do on a regular basis, is absolutely the commercial conversion stuff, right? Because, you know, you alleviate stamp duty situations like that as well. Bridging finance is so massive in that arena when you think about it as well, because you can acquire security, you can use the bridging finance in order to do the conversion works that you want to, and obviously then turn that client out onto an exit like mortgage, you know. And the beauty of it is that you can take that client on the journey with the bank. So it's, I think from a strategy perspective, we really noticed the difference in kind of the appetite for commercial and experienced, savvy investors, but also, you know, first-time investors. Now, you know, I guess from a lending perspective, you've got to try and be as pragmatic as you can and try and create solutions for investors. And that's why we consider, you know, first-time landlords now, or first-time commercial landlords, because we appreciate the fact that people are going down this route. And it's just, I think it will get bigger and bigger. I think commercial will be massive next year, or this year, I should say.
No, we're actually seeing that as well. So with inquiries that we get in from clients, is they're actually looking for commercial deals in general, and with the option of actually doing commercial to residential, so where you can add some value. Now, when it comes down to interest rates, last year was quite an interesting year where we didn't get the amount of cuts that we were initially anticipating towards the start of the year. So where do you see interest rates, or where does the bank see interest rates towards the end of 2025?
See, interest rates is well, I say interesting one, that sounds really cheesy, but it clearly is, right? I think the fluctuation of interest rates was mad last year, but like with the changes that have happened to base rate now, I've already seen a huge increase in activity, because you had that period for almost 18 months where people were like, the rate's going to come down, the rate's going to come down. And investors who were in a strong position where they could hold their nerve, they kind of did, because they were like, well, I'm not going to refix here, or I'm not going to act here, because the pricing's going to drop. But I think with the cuts that have happened now, realistically, I mean, how much more is it going to go down? For me, or for us as a bank, I see that there's not going to be a massive drop now, and I think this is kind of the norm. This is where it should be, and this is where it typically, if you're old enough to remember, is where it was, right? So we did have some great years where rates were ridiculous, but actually this is probably where I think we'll plateau. And I think as a result of that, I think we're in store for a really active year with regards to business.
Because I think people think like 0.5% is the norm, but yeah, I think 5%, like when you look at historically, I think around 5% is the norm, and I guess best case scenario, you'll end up like 3.5%, 4%.
Showing our age here, right? But you know, it is what it is.
Yeah, but you've got some people that actually never had an interest rate above 1%. So absolutely. I think for them, it was just a shock. Now, has the bank experienced like people defaulting on loans, or finding it difficult to exit loans when they've gone on to say dev or bridging finance, or has that been pretty level with how it's been, say, over the last 5 years?
I'd say touch wood. Even with the kind of changes to interest rates and stuff like that, the beauty of the bank and the way we have our risk appetite is that we have a strong appetite to lend. You know, we really want to make sure we support people, but at the same time, with the risk appetite that we have, the way we conduct ourselves in accordance to making sure that we want to lend to people, you know, the performance of our book is fantastic, and we haven't really seen a massive increase in arrears cases as a result. Actually, the book seems to be performing just as well, because you want to lend to someone, but you want to lend sensibly, right? So you want to make the right decisions, and I think we've always done that. And as a lender, when you continue to kind of, you know, address your risk appetite and in accordance to market conditions, as things change, you always kind of either tighten up a little bit because you have to, or you kind of you loosen up because you feel that the environment's better to lend. As we've done that along the way, we've kind of maintained that stance, and it just seems to just be going really, really well. So touch wood, as I said, I hope it continues, but you know.
Now, there's been some speculations of a Shawbrook IPO.
No comment.
There's rumours actually you're going to be quite a rich man, all your shareholding.
Listen, this might be the first and last video I do for you guys for a while, but you know, listen, I can't really say too much. Obviously, there's nothing for me to comment on, but it's out there and it's out there for people to read. So make of it what you will. But I think the truth of it is, from a longevity perspective, Shawbrook have been around for a long time. the plan will always be for us to continue to be around for a long time and support the investor market and be up there as the challenger bank that we are.
No, I agree. Now, you guys have been supporting, obviously, the Elevate series that we've been doing in collaboration with Shawbrook over the past 12 months. We're pleased to actually now get going again with you guys, and we're going to be taking it national. Now, if people wanted to get in touch, would you be attending these events or?
Absolutely. If you don't mind, I will just jump on this, right? So, with the Elevate series, we started this back in, was it February last year, February 2024? And like, I have to say, and this is hats off to yourself and Sanj and obviously Team Savoys, right? But you know, we started this off, and the thing's it's just grown and grown and grown, hasn't it? The demand for people to attend, and that's nothing more than just down to kind of the credibility that you guys bring to the table, and that's you know, the people you put in the room from a knowledge perspective, from an expertise perspective, from a networking perspective. You're going to be surrounded by people who really know what they're doing, you've got some really seasoned experts, but in so many different areas that you're always going to walk out of here with a connection. So I think real credit to you guys, but it's not only the people that attend, it's also kind of what you do with regards to the presentations, you know, bringing the people on to help educate others and who may not know or may not have come across scenarios. It's been amazing for us to be part of it as a bank, to be fair. So I just want to thank you guys for your support as well. It's fantastic to collaborate with you as always. But I think what we've done is we've created a bit of a monster here, because it seems to be growing really, really quickly, which is great. And you know, I'm looking forward to a great year again, and I will absolutely be here. So feel free to reach out to me.
So for those that don't know, we created this Elevate series at the start of 2024. I think we initially expected to have like 30 people attending, and we were only going to do like a handful of them. I think the last one we did in London, I think we had over 120 people that attended, which was the biggest attendance that we had. We ended up taking it national. We went to Manchester. We had over 100 people turning up to the Gotham Hotel. We're now looking at taking this around the country as well. So if it's something that you're interested in, have a look in the description. We're going to have links to the other events that we'll be having throughout the year, including Manchester. We're hoping to be in Manchester actually 20th of March, and we'll be back literally each month. I think it's going to be this year, so it's going to be action-packed. I want to thank Jazz for taking time out of his busy schedule, making time for us, sharing some gems, and some news about his shares within the company as well.
Yep. Watch this space.
Yeah. If you like this video, make sure you hit that bell icon, subscribe. We'll be back each and every week, and we're hoping to have some more interviews with the guys at Shawbrook, sharing that knowledge. We hope to see you there.